Are Americans and Europeans unjustly discontent with the economy? How can people be so negative about the economy and perceived that things are going badly when the aggregated data shows that there's robust GDP growth, improvement in unemployment, and improvement in inflation? Well, let's look at some graphs that are going to tell us. Number one, the misery index. The misery index, which adds the unemployment rate of the economy plus the inflation rate, is rising in the United States. Furthermore, it is rising and reaching levels not seen in the pre-pandemic level. Why is this happening? Number one, the stimulus packages implemented in the last years have created more inflation and have not improved employment the way that they should have, or at least that governments expected them to happen. And it's very simple. If you look at what they do basically is bloat government spending, bloat debt and deficit, and they leave a trail behind of higher inflation and impoverishment of citizens. The misery index in the United States has been rising in the past 12 months, and it's much higher, between 20 to 25%, than what was the norm in the period 2017 to 2019. That is one of the reasons why citizens perceive that the economy is not doing well. But what is happening in the euro area? Let's look at the next graph. In the next graph, what we can see is that in the euro area, the misery index is much worse. And when I say much worse, I'm talking about significantly worse. In the case of Italy, for example, the misery index is similar to that of the United States. Okay, that's not that bad, considering that in the United States it's not a good figure. But let's look at what is happening in the euro area one by one. In this graph, courtesy of Bloomberg, what we can see is that Spain is leading the misery index by a mile. And on top of that, it is higher than in the average of the euro area, higher than the average of the European Union, furthermore, higher than in Greece, and certainly much higher than in Portugal or Italy, as I mentioned before. So, all of this is showing that when the misery index is rising, it's absolutely normal that there is a rise in discontent from citizens. And it's logical, not a surprise, that they perceive that the economy is not doing well. Let's go to the next graph, which goes back to the United States and tells us what is happening with unemployment. Unemployment is rising. The unemployment rate is rising. The last jobs figure may have looked relatively robust. However, it was bloated by 70,000 jobs coming from government. 1/3 of the job creation in the last figure came from government jobs. Furthermore, the unemployment rate is rising and has been rising for the past 12 months. Let's look at the next graph, also courtesy of the Bureau of Labor Statistics, which shows us exactly that, is that unemployment in the United States is higher than it was previous to the pandemic, but significantly higher at 4.1% and creeping up point by point in the last 12 months. Let's go to the next graph, which also shows us an important factor about that level of unemployment, is that African American citizens' unemployment is actually higher than it was in 2017. And this is showing as well how the gap between the different races in terms of unemployment has widened, not reduced. The government that prides itself on reducing gender and race inequality is actually increasing race inequality. As we can see, the gap is increasing, and there is a very significant difference between races in terms of unemployment. So that may also lead us to understand why African-American level of support of the current administration is not as strong as some of the commentators may perceive. Let's go to the next graph, also courtesy of the Federal Reserve, which shows us what all of these stimulus packages have left behind. Oh my God, a massive increase in debt, as you can see, but also an enormous increase in the net interest outlays on federal debt, i.e. in the interest expense. So the problem of the United States is that stimulus packages don't stimulate the economy, that the economy is obviously recovering because of higher productivity, because of the private sector, etc. But in reality, all these stimulus packages, all they leave behind is enormous taxes, enormous debt, and a massive level of expenditure in interest, which leads to a much bigger problem of debt in the future. So what will happen then? That means higher taxes, lower productivity growth, lower real wage growth, which is another of the problems for citizens, and certainly weakening of investment. Not a good scenario in the future. Let's go to the next graph, which also shows us from the Federal Reserve what is expected out of interest rates. What is the problem? When fiscal policy is sabotaging the Federal Reserve's monetary policy, i.e. the Federal Reserve is tightening, and at the same time the government is expanding its size in the economy and its deficit, what happens is that the entire burden of the normalization of monetary policy falls on the shoulders of citizens and small and medium enterprises. Higher taxes, higher interest rates, more difficult access to debt, all of those things are negative for the fabric of the productive society, while the government simply passes the bill to the next one and increases its interest expenses and increases its debt. So what does this show? What this shows is that the Federal Reserve is unfortunately expecting higher rates for longer. So it is logical, because all of that deficit accumulation and all of that debt accumulation is going to be persistent inflation in the future if things continue the same way. So that's why pro-growth strategies need to bring down inflation and reduce the government expenditure in order to curb inflation. Let's go to the next graph, which also shows us what is happening in China. In China, we have a slowdown of the economy, and it's certainly growing at 4.5% depending on the estimates, but the reality is that social financing, access to credit, is actually weakening and quite significantly from previous levels. One can say that that is a positive, because they're not recovering with massive increases of debt, maybe. But we also have to see that there is definitely an impact on investment and on personal loans. So all of that may put at risk that 4.55% growth. At least, in any case, it is not coming from a bloated government spending program that would have made the same impact on the economy, because there's already a problem of overcapacity, i.e. no impact, and it would have left a bigger trail of debt. Hence, what we see in all these graphs is that government stimulus packages never generate a positive outcome for the middle class. What we are seeing is the erosion of the middle class. What we are seeing in the euro area, in the United States, is that although headline figures may look decent, the reality for citizens is impoverishment. And impoverishment in a way that is extremely antisocial, because it is affecting more those that are contributing, those that are creating jobs, those that are starting a business, those that are supporting their family. It is literally eroding the middle class. In China, we are already seeing the negative impact of stimulus packages, one after the other and one after the other. In the United States and in the euro area, what we are seeing is the erosion of the middle class, the impoverishment of small businesses and families, and at the same time, a very concerning increase in the size of government that will always lead to lower growth, lower productivity growth, lower real wage growth, and a worsening of the investment path. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.